Yeah, the three big events that have gone on this past month is definitely starting off with global trade. We've definitely seen a heightened tension going on there. The U.S. went through with some September 1st tariffs, and China retaliated back with tariffs on their own. This definitely is telling us that things are not amicable anymore, obviously, and they've gone to another level, and this will continue to be a big sore point as we continue on for the remainder of the year. The second part is the Bank of Canada. They decided to stay pat, didn't change interest rates. Now, you could have debated whether they should have cut rates or not. GDP numbers were stronger, but unemployment has also increased as well. And when we think about around the world, the picture in Canada might look a little bit better than what we're seeing in other parts of the world. Canada's less impacted by global trade, as an example, and therefore maybe Bank of Canada decided, maybe we wait until we see, deterioration in the fundamentals before we cut rates. So again, not necessarily a bad decision, especially with housing and consumer debt levels, at elevated levels as well too. And the third thing we're watching and we've seen in the last month is definitely heightened volatility across the board. And that again is tied to global trade, but also slowing down in earnings that we're seeing. And then when you think again across all the regions, we're seeing consumer sentiment coming down as well too. And again, tied to that will be the fact that consumer spending will slow down with that, which will transport to lower GDP growth. So obviously, as we look through the future months, particularly September, global trade continues to be the number one focus. We've definitely seen, again, heightened tension there. We think this will continue on. So how both the US and China react will really be important on the global risk aversion scale, and definitely something that has to be a number one priority. Other thing to watch is continued talks in Brexit. How are things going on? We just saw, obviously, the Conservatives move over to the other side, and therefore now no longer a majority government. So you're going to see continued tactics going on in Brexit discussions, and that will be definitely a big focal point if you're thinking about the Eurozone. And tied to that probably is what happens with automotive tariffs as well. Though that may not be a September news, but you might get some indication as tariffs start to come out across the board. And then the third thing to keep an eye on is just how we're seeing on the volatility spectrum. We've seen heightened volatility, but will that continue on in the coming months as well, or will it die down like we saw earlier parts of this year as well? Given this current climate that we're seeing, we definitely have taken a defensive approach in terms of the portfolios. We've reduced our equity positions further, so now we're roughly around 3% underweight equities. Though we still have a bias towards the US a little bit, we've taken that down a little bit as well too. Our biggest underweight remains the Eurozone market. Obviously, given the uncertainty around Brexit, we're underweight there by the biggest margin. We're slightly underweight the emerging market region given the uncertainty around global trade. And then within the bond allocations, we've moved to a higher credit. So therefore, higher quality credit that's not lower credit ratings. And therefore, we try to give the bond portfolio have a higher defensive positioning than it would have otherwise. And that again is tied to the higher volatility that we're seeing in the marketplace.